statistical bar charts in the previous lessons. Now we will focus on cluster analysis. Cluster analysis, as well as any analysis of the volumes, is a statistical procedure. It collects data containing information on the number of deals, and then organizes the information in a relatively homogeneous cell, called clusters. Cluster analysis is the most informative one. We see emissions of volume per unit of time. At a concrete price, we see the specific volume. For example, for an hour, we can see that 42,964 contracts were bought and sold. Using a cluster graph, we look inside the bar. We can see the point actions of a major player. The larger the volume in the cluster, and the less time it forms, the more aggressive behavior of the seller or buyer is. Following very large volumes, the price is rising or falling, very often quite rapidly. Comparison of this volume with the other one will help us to identify large and significant volumes, as well as to study the market's reaction to this volume. Knowing the average volume of our tool, we must pay attention to the volumes that greatly exceed it. For instance, in mini CNP, in 1 hour time bar, the average volumes don't exceed 20,000 contracts. Respectively, we draw attention to more significant extent, for example at this. When we see a large volume, we must also look at the reaction of this volume. For example, in this case, the price fanned out this volume several times. If we look at the previous session, we see a large volume, which was formed at 2 p.m. at the price of 2069. Price dropped from it down, but it never was able to rise back, even the next day. As in histograms, we can explore the aggressive reaction of buyers and sellers. In order to see the delta, we need to select the module cluster chart. In the type menu, we choose delta and see the positive and negative numbers inside the cluster. In the superliquid instruments, like mini CNP, internal cluster analysis on the delta is not too informative. For example, here we see that customers bought at the same level as the sellers did. At the same time, the figures are not very different. We can understand which of them won only knowing the reaction of the market at this level. But there are tools which are quite revealing, for example, shears. Let's consider stocks of Caterpillar for October 27. We see a strong fall down. And we see when buyers began to buy it up, a large amount, 104,623, raised the price up. Subsequently, despite the fact that there were sales, buyers paid off again from this level. This has led to an increase in prices for the following day. Also, as in histograms, we can look at other options in addition to the delta. The delta in percent, bid-ask, delta with respect to the volume, and so on. It is also important to compare the volumes in a cluster with the overall picture. High volume confirms the interest in significant levels. For example, on October 13 contract mini CNP, we see price fluctuation within this range. At the end of the day, there are a significant amount. The response to this volume is a price reduction. After 2 days at the same level, the new volume appears. Reaction to the amount raised the price up high. Price rose and fell after the entry of big player. Only in this case, the major player entered down, and here, up high. We cannot see accumulation of the volume for not only 1 day or 1 hour, but in the tick range. To do this, we need to select the module tick bar chart. Now we see the volume of 1 tick, 1,253, 593, 475. Buying big lots with 1 tick indicates impatience of sellers or buyers. On the other hand, volumes accumulated without major ticks talk about the indecision of both sides. Accordingly, it also gives us information how sharply the price may go. Often major ticks are local extremes. For example, consider the movement of euro-dollar of 21st October. We see that very often the major ticks are at the top of the chart, as well as at lower levels. If you are trading intraday, you can pay attention to it. It often happens that the price bounces for 1 tick several times. Tick chart can also show the hidden ticks. Some tools contain the so-called latent ticks, ticks which are not held in common order book. For example, let's consider the movement of the index brand for October 21st. Visually, we see no major ticks, but if we include the option hidden ticks, we see that the chart, however, contains major ticks. At 10:18, there were several big ticks. 1,440 contracts, 665 contracts, 523 contracts. This volume was not visible in the old book. However, the program shows it. The price is also fighting over the major ticks, as well as from large volumes, even hidden. In order to learn how the volume was formed inside the hourly and daily clusters, we can see another module box chart, which shows the value of the minute and second ranges. We can choose a range from 5 seconds to 1 minute, and the period from 15 seconds to 15 minutes. There is also a large accumulation of volumes even local. We can also select these volumes. The price of this level can also fight back, and in the short term you can make money. Then there is a breakthrough with large accumulation of volumes. We see that in just 3 minutes a large volume was formed, from which the price has gone far down. In the cluster we see just a large volume. In the box chart we see that this volume was generated very quickly. Large volume confirms the interest of players to meaningful levels, but it can be a correctional movement after the significant growth or early fall. No one can foresee it in advance, but you can with high probability understand how strong the movement may be. Studying general statistics for large volumes will tell you more about this in the next lessons. Cheers!